Hi everyone, today I'm going to talk about Marks & Spencer's move into China. This is an OC video filmed on my Galaxy S6 today in Marks & Spencer, just as they have the 50% sale in Shanghai on Huaihai Road. Even though this half-price offer was introduced yesterday, you can see there's still not that many people in the store sucking up those fantastic bargains. Please notice the size of the clothes as we zoom in on them, because this is going to be an important point for later in the discussion. In 2008, Marks & Spencer made their first investment into Shanghai. They built a store with the size of 40,000 square meters, with a long-term plan of opening 50 more stores in the future. This was clearly not a small investment decision, and represents a long-term commitment to the Chinese market. One of the reasons Marks & Spencer may have moved to Shanghai is because it's an incredibly well-developed city. I know Beijing is the capital city in China, but Shanghai, according to Zhaopin.com, which is a job hunting website, has consistently had higher salaries than Beijing up to 2016 and is a strong representative of the increasing middle class that we see in China today. Marks & Spencer were clearly trying to target middle class customers. This is just coming after in the UK in 2008 a 6% decline in sales. So what they're really looking to do is branch out, get some more business in different countries and really see what happens. One thing that they're notorious for is copying their same idea across the board. So they did exactly that with clothes sizes and store layouts. Everything was standardized, everything was the same, including the food that is in the Marks & Spencer stores. According to this document, Marks & Spencer is a fully owned foreign enterprise without any partnership deals. So let's see what happened on their hard entry into China. This 2009 source that I will show you here shows that they believe when they came to China they had a really strong supplier base both in China and Bangladesh already. So they already had a strong network in which they can get their clothes and their food from. As it says here, they had long existing relationships with food suppliers, so again, very easy to standardize and maintain the level of stock and supply. So let's start with what was going wrong. Paul, an analyst interviewed by Bloomberg, said right from the beginning they got it completely wrong. The reports have stated that their clothes sizes were completely wrong. Because they were completely standardized, they didn't fit the Chinese market at all. One report even went as far as saying that it was only old women over 60 that would enter these stores. In 2014, the South China Morning Post claims that due to online competition from places like Tmall, JD Mall, Marks & Spencer would be losing out, where customers have a diverse range of channels to choose from when buying products. They obviously didn't do their research into Marks & Spencer at the time, because they reported 200% increases in sales online via these mediums. More online research indicates that in 2014, Marks & Spencer were willing to invest further into the Chinese market, particularly in big cities like Guangzhou. It appears that throughout this stage, Marks & Spencer has still been trying to adopt the standardization model, where all clothes were the same, they were sourced from the same areas, and they were produced to a certain standard and sold in stores which were alike in every single country, very McDonald's-esque. They were hoping to ride the wave and essentially attract customers using the standardized model that has worked in many countries around the globe. Now, let's look further into why Marks & Spencer ran into problems. So one of the biggest problems claimed by the South China Morning Post is they failed to have good brand positioning. Now, brand positioning is very important. In China, there's been a lot of foreign companies that have positioned themselves very well and managed to make a sturdy profit. For example, Louis Vuitton. If we look at the first graph, we can see that in this market here, China represented 1% in 1995. By 2012, the Chinese custom represented 25% of the luxury goods market. That is an incredibly large increase in such a short time. Marks & Spencer entered China around 2008 during this time, and if they positioned themselves as a luxury brand, perhaps they could have had the same successes that these other companies had. An important thing to note is when you look at this graph, it might appear that the market is not actually expanding in Europe, America and Japan, but actually the market itself could be expanding. It just means that China's got a growing middle class and added many more customers to the market. We would have to look at another graph to really see if the market is contracting or expanding. Coincidentally, this brings me on to the next graph, and from this graph we can actually see whether the market has contracted or expanded. And looking at this information, we can see clearly that the market itself has expanded rather than contracted. It appears that countries everywhere except for Japan are purchasing more of these luxury goods from the period of 1995 to 2013. It's not all fun and games though. Looking at this next graph from 2010 to 2013, the luxury goods market in China started to decline, and by 2014 the goods market actually shrank. Now this is not a negative thing really for these luxury brand companies. At this point, as the market becomes more mature, they need to consolidate and then focus on competition. It does not mean they weren't making a profit. They were still making quite vast profits, but these situations occurred for a number of reasons. One of the main reasons is the government started an austerity campaign where government officials were not allowed to purchase these bags and give them to their family members or friends. This affected it quite greatly. Also, the tax rate on these goods became quite high, and Chinese people began going abroad to buy these products. There is also a third reason, which is represented by a decline in GDP growth. Although national statistics claim that GDP growth remains around 6% at this time, other companies have published reports claiming that GDP growth is not as published by the Chinese government. Going back to what the South China Morning Post said, even though they were wrong regarding M&S's foray into the online field where they had actual 200% profits, they were right in saying that the market is very competitive. And in China actually, it favours the seller, and this is because Taobao and Tmall, the two biggest platforms used by M&S, they have a returns policy where it's no quibble, 7-day returns policy online, and they must accept this. It seems quite promising that M&S were having success in these areas online. The Marks & Spencer annual report shows that in China, they believe that their growth had been stunted due to the fact China was suffering from lack of economic growth or economic decline. But according to government statistics, that is not the case at all. However, Chinese GDP statistics have always been brought into question on a global scale. The Financial Times goes one step further and claims Marks & Spencer suffered a 1% decline in sales of general products, and this is the reason that fundamentally made management decide to close so many stores in Shanghai. Here is another piece of OC that I filmed yesterday in Shanghai. Here I am just waiting at the till to pay my order, and if you look over at the cashier's desk, Marks & Spencer are still using the antiquated UK payment system. This is the original system, which takes quite a long time to complete. You must put your card in, enter the chip and PIN number, and then wait for the machine to print a receipt and sign that receipt. An incredibly long process in this modern age. In Shanghai, they have two popular apps called Alipay and WeChat, and basically you use your phone to generate a QR code and you show it to the cashier and they scan it, and there's no cash that changes hands. It's a very, very quick transaction. Generally this transaction time is about 1 to 2 seconds, and this technology has been around Shanghai for about 3 to 4 years. Now you can imagine, as a patriotic British man walking into Marks & Spencer in Shanghai, I was absolutely aghast to see they hadn't adapted to this basic level of payment services. In the heart of Shanghai, it's incredibly uncommon to see such a large-scale company adapt so poorly to Shanghai payment practices. This made for incredibly long waiting times when wanting to buy products, and sometimes I didn't want to wait 30 minutes, so I just ended up not buying anything. Moving on. Online, I found it quite difficult to access financial data regarding Marks & Spencer's foray into China. One notable thing that I found in the annual report for Marks & Spencer was that rather than having a full audit like most countries, in fact, they only had an audit on parts of their business in China, which I find very strange indeed. And I think this may be part of the reason why I'm not able to access the files that I want to regarding their financial information. So to sum up briefly, the first problem Marks & Spencer faced in the Chinese market was product positioning. They didn't place themselves as a high-end product like Louis Vuitton or Häagen-Dazs, which saw great successes in the Chinese market. They didn't position themselves as high-quality, cheap clothes suppliers either, like many sellers in the online platforms, although the online platform idea did have varying degrees of success. Secondly, I think costly storefronts was another big problem. Marks & Spencer were notorious for choosing prime locations in Shanghai, with very, very expensive prices per square meter. A 40,000 square meter store is definitely not going to be a small expense. The third biggest issue was standardization. As shown right at the start, you could see that the remaining clothes on the rack were all large or extra large sizes of clothes. This is because the definition of extra large and large in Europe is much different to the definition of that in China. The Chinese are generally a much smaller population. I think it's fair to assume there was a lot of unsold merchandise in Marks & Spencer in Shanghai. Fourthly, their payment systems were incredibly antiquated, causing large queues for no actual reason. And fifthly, I would just like to say there was a general lack of understanding of the Chinese market. I personally feel like Marks & Spencer did not do enough due diligence before investing in China. And what about the future? Now, Marks & Spencer management have stated that they want to focus on their core competency, which surprisingly enough is not clothes. It's food. Apparently that's been a largely growing sector over the last few years, and it's something they want to focus on more strongly. Furthermore, this loss is not just limited to China. They've decided to close 53 stores internationally. However, the biggest portion affected by this is indeed China, where every single store will be closing down. Although all 10 stores are closing in China as we speak, this does not mean the end. The management in Marks & Spencer are still looking for investors to whom they can offer a franchise in China and see the business growing that way. By looking for partners to franchise with, they can lower their burden of responsibility by passing it on to the franchisee. Furthermore, the franchisee will have to give a portion of their profits to Marks & Spencer. This could give them some easy profit in the future. There are many advantages and disadvantages to this kind of business model. One potential advantage is the fact that Chinese investors may have a better grasp of the market than Marks & Spencer did and may be able to adjust the products to customer specifications to a more accurate degree. This type of model may, however, in the future have negative effects on the brand of Marks & Spencer as they diversify in the Chinese market. It is clear that the existing model doesn't work, and franchisees will definitely want to vary the output of the stores. From this, the Marks & Spencer management team can turn their attention back to the UK, where they've promised to refresh 100 stores, although I've no idea what that means. I'm not sure that closing down for a few weeks and adding a lick of paint is the best business model to attract new customers in the domestic market, but we'll see. This video is what I hope to be the start of what becomes a long line of videos regarding business in China, the language in China, the culture in China, and how to integrate your business as part of China. My name is James, and nice to meet you all.